Also on the economic front, I want to bring this up. I've been talking about it, right? The biggest theme is inflation. So funny. If you hashtag inflation pre-November, nothing, nobody cared. Now it's top 5, top 10. If you're looking at stories are mentioning inflation, you're looking at Twitter, social media. Again, we get all these statistics of the trends that are taking place. Inflation's up there a lot. Everybody's talking about inflation now. So the economic front, what do we see? More signs of inflation easing. Sounds familiar for listeners to this podcast. He says inflation, it's still going through the roof. Fed's going to go crazy. It's easing. We're going to continue to see these numbers moderate and come off their highs. So this time it's with housing starts fell 10% month over month. 10% month over month. While building permits fell 1.3%. It makes sense because those higher rates impact housing the most. Seen people saying, wait, I'm going to wait. I don't want to pay another $700 because 6-7 months later, because mortgage rates went from 3 to 5, 5.5%, 6%. They're below 6% now. I don't know where they are. I haven't looked at. They were 5 and change. I think they fell below 5 a little bit, but a lot more expensive to buy a house today than it was 7-8 months ago. You're also seeing some supply chains, even the home builders saying, even with permits slowing and new builds slowing. New York Manufacturing Index, did you see that? So now you're seeing them order a lot less because they're nervous over the next 6 months. But the New York Fed Manufacturing Index crashed. It was 11.1 in July, which is terrible, but it's a negative 31.3 in August. Holy cow. Forget about if you know what that means, right? You just know that 11 is pretty far off from negative 31 month over month. So that's pretty bad. So these survey members said they expect to see demand slow incredibly and sharply over the next 6 months. And another sign with the inflation coming down, look at oil. Broke through the 90 level, right? Where is it? $89? It was $122 just 2 months ago. You're down close to 30% on oil. We'll see how interest rates might not impact oil as much, but we are seeing demand get curbed. Expenses go higher. People are doing less. They're figuring it out, especially with gasoline prices coming down. And Goldman came out and said, look, we expect oil prices to shoot sharply higher, I think to over 120, and gasoline prices to shoot sharply higher to end the year. Let's see what happens. Not demand. I don't know if we'll see that demand, right? Because we're starting to really produce a lot more oil finally, which is good in the U.S. Who knows? Tensions in Russia, Ukraine, if that ends, you're going to see food prices crash. You're going to see oil prices and gasoline prices come down tremendously, which means Russia right now is in the driver's seat because a lot of these kind of should be begging them to say, hey, all right, lay off. You got your point across, whatever. But it is amazing how heading into November elections, nobody's talking about the war anymore. Remember that was the number one story? Russia's attacking this, and Zelensky needs help, and they're attacking a nuclear plant. Watch out, holy cow, all this stuff, all this. We're not hearing too much about it, right? All of a sudden we stop caring. Yeah, we'll give you $4 or $5 billion in weapons and not account for it and not know where exactly it's going. That's okay. And then here you go. Just fight your war. But notice how we're not really talking about that. Not too much anymore. However, if we see that end, which I don't think it's a forever war, that's going to be great for food prices, which remain high. Okay, we can't say anything about that, right? There's no denying that. We want to see food prices come down, and they need to come down. From a personal level, guys, if you listen to this, I'm not sugarcoating anything. Prices are down, but they're still incredibly higher year over year. But as prices come down, as an investor, that is great. It means the Fed's doing its job. And yes, you're going to have the Fed presidents and even Powell say, we need to see more evidence. 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 They have to say that. They can't say right now that, hey, we're going to slow it September because everyone's going to go out and buy. The market's going to take off and everything's going to get expensive again. So you're looking at the Fed in a great position because it's clear as day. Higher rates are working to slow the economy, especially housing. Yes, rental incomes remain stubbornly high, which is a major component in CPI. Eventually, those will ease as housing comes down. But housing demand is slowing while supply chains are easing as we're seeing demand pull back. So when it comes to the Fed, what are they doing? They're finally doing their job, which I mentioned last week. You could destroy them. And no, it's great to destroy the Fed. We've done it as well of the shitty job they've done. But they're finally in the right place. I said last week, the Fed is, for the first time in over 2 years, ahead of the curve when it comes to inflation. Why? Because they have the ability to continue tightening if inflation does not moderate. Today we see gasoline prices, oil prices, food prices continue to surge. Hey, the Fed's there. And they can tighten. They can raise rates. Also has the ability to slow rate hikes or even stop them if we see the U.S. economy really start falling into recession, which we are likely to see because those job numbers are going to be horrible. The job numbers are going to get very, very horrible. I don't know how quick it's going to be. We might have 1 month where it's going to be, okay, we've seen it with continuing claims. You're going to see those job numbers. And you could just look around you and look around all these places that were hiring so much. They're not hiring as much anymore. And you're seeing layoffs in the news like crazy, especially from the largest technology companies. You're seeing it, even in financial services industries, throughout the crypto industries. You're seeing layoffs. They're generating less money. Growth is slowing. They're not going to hire people at the same pace, which means you're going to see wage growth probably slow as well, a little bit. That's what you got to worry about next. You got to look at those unemployment numbers. But right now, you're looking at the Fed and what we talked about. They're ahead of the curve. There's no surprises here. And what does that do? It creates certainty. Well, if we have inflation going lower or higher from here, the Fed's pretty much in charge. They can do lots of things right now, which makes sense. Ease, tighten. Again, it was a lot different. When I said the Fed doesn't have to do anything crazy now, whether we get inflation going higher or lower, is because we have rates at 2.5%. They're going to be at least at 3% to end this year. Some people think it's higher. I'll talk about it in a minute. But when the Fed is being forced in November to raise rates from 0 to 2.5%, again, in just 7 months' time, because inflation soared to the highest levels in 40 years, and you had no clue and didn't see it coming, that's when we get 11 out of 12 down weeks in a row. That's why we're not seeing this crazy volatility and 3% moves, especially over the past few weeks. And what's happened over the past 2-3 weeks, the economic data has been showing that inflation is easing. This creates more certainty. I'm not saying inflation's okay and we're good and we still need it to come down. But it's heading in the right direction. It's going to continue to head in the right direction as long as we keep rates high. Or where they are right now. With that said, because as I said, certainty is great for the markets. It's predictable, and when you have uncertainty, that's when we have a crazy market, something we've never seen before. Massive deleveraging, nuttiness, craziness everywhere. That's what you see when you have uncertainty, when the Fed has no clue what they're doing. Now, back in the driver's seat. We have certainty in the markets. That's great. That's why you're seeing stabilization. You're seeing follow through here. We've gone up tremendously.